If you are considering investing in the stock market, you will need to have a solid foundational understanding of equities in order to achieve financial success. The stock market, in its most basic form, may be conceptualized as an analogy to the process of knowing the precise quantity of chili powder to include into a dish. You don't want anything that's too tasteless, but you also don't want something that's so spicy that it burns your mouth. A combination of knowledge and experience is required to determine the appropriate quantity. If you want to be successful in both the kitchen and the stock market, having the appropriate formulae will be of great assistance. Number 1. In the trading of shares, fractions were used. Before to the year 2001, shares could be bought and sold in fractions. This meant that an investor who purchased a share for £100 may have owned 0.004 of the firm rather than simply a single entire share. Number 2. Berkshire Hathaway is the stock that costs the most per share. Berkshire Hathaway has the most expensive share price of any company in the world. It is currently valued at over £214 billion, which places it almost 3 times larger than either Pepsi or Coca-Cola in terms of market capitalization. Number 3. There is no ideal unit of measurement. While attempting to determine whether or not a company will generate a profit, investors and analysts rely on a diverse range of criteria. Nevertheless, there is no such thing as a perfect indicator that can accurately anticipate how a stock will do in the future. Number 4. Purchase at a discount and resell it at a profit. When it comes to making money with stocks, the most fundamental strategy is to purchase cheap and sell expensive. As the price of a stock falls, it makes it easier for investors who purchased shares at an earlier date to make a profit by selling their holdings at a higher price. Number 5. It is anticipated that there would be a rise of 70% in the stock market annually. There is a 30 to 40% risk that the stock market will go down during any given year, compared to the 30 to 70% chance that it would go up. Because of this, it is an appealing investment option for a large number of people who desire to generate income from their savings. Number 6. Even pirates have a stock market. One of the earliest that is known to have occurred was in the year of 1783, when they were residing in a safe haven for pirates known as Nassau, which is located in what is now known as the Bahamas. Number 7. Evaluate both your needs and your desired goals. It is essential to have a solid understanding of the sort of stock you will be purchasing as well as the commission rate that will apply. There are certain brokers who will allow you to trade commission-free if you have a verified account with them or if you deposit a certain amount of money into your account each month. 8. It is possible that there are more mutual funds than you believe. It's possible that you're underestimating the number of mutual funds available. During the course of the past 15 years, a combined total of $51 trillion worth of investments has been made using these kinds of accounts. Number 9. The month of October is historically the most volatile. Many have the misconception that October is a highly risky month to invest in stocks. This may be due to the fact that it is getting close to the end of the financial year in many nations. It's also possible that it has something to do with the fact that during this time of year, there are more whispers going about potential corporate takeovers as well as other big economic events taking place all over the world. 10. Your profit can be subject to taxation. It is quite likely that a portion of your earnings will be subject to taxation unless you are the holder of an individual stock that pays qualifying dividends or a mutual fund that derives at least 90% of its investments from equities that produce qualified dividends. Number 11. There is no such thing as a sure thing. There is no such thing. Analysts of the stock market frequently speculate about the direction in which the price of a company's share will move. When it comes to forecasting the future of stocks, however, there is no such thing as a definite certainty since nobody knows what the future holds. 12. The stock market is able to recover in a reasonable amount of time. In most cases, the stock market is able to rebound from a fall in value in a reasonable amount of time. In the 1930s, for instance, it was around 4 years before the stock market began to rise again after a crash in 1929 and ensuing slump of the economy due to the Great Depression. This occurred in the decade after the Great Depression. Number 13. September is the most terrible month of the year. September is consistently one of the worst months for the stock market. This might be due to the fact that individuals are so pleased with how much money they gained during the month of October that many investors make the decision to sell their shares in order to make a profit, which in turn causes the value of the stock to decrease. Number 14. There are more than 400 years of history behind the stock market. The stock market is one of the most traditional and long-standing methods of financial investing in the world. It is thought that in the year 1602, The Dutch East India Company was responsible for the creation of a primitive form of the stock market that was known as stocks. 15. There is much more to consider about stocks than just their prices. The notion that a stock that costs $100 must be more expensive than one that costs $20 is one of the most widespread misunderstandings regarding stocks. In point of fact, it is very normal for firms with lower market capitalizations to have higher price-to-earnings ratios. This is because smaller companies tend to have lower earnings per share. Number 16. When it comes to trading stocks, you have a variety of options available to you. On the stock market, stock shares can be bought and sold. In this location, they may be purchased or sold depending on the price that people are ready to pay for them at any particular moment in time. Shares can also be traded in particular firms, although this can only take place between individuals who already have ownership holdings in that companies. 17. There are about 60 stock exchanges located across the world. There are currently over 60 stock exchanges operating throughout the globe in today's modern times. The most well-known of these exchanges is known as the NYSE Euronext, and it may be found on Wall Street. There are also a number of the major participants, such as the Nasdaq, in addition to hundreds of smaller ones that contribute to the maintenance of financial markets all over the world. Number 18. In most cases, taking calculated risks will result in greater benefits. Individuals are able to turn a profit on the stock market by purchasing the shares of firms they believe are trading at a discount and will, in the long run, be worth more. They can also employ margin financing or purchase options contracts to increase the amount of money they make off of their assets. 19. Microsoft's market capitalization has passed the $1 trillion mark. Microsoft was the first firm in history to reach that level in April of 2019, and Apple was the company that came in second. These corporations have respective values of £909 billion and £893 billion according to their current market capitalizations. Number 20. The very first book on investing was published in 1688. Principles of Trading is the title of the first ever book on investing to be printed anywhere in the globe. Back in the year 1688, a merchant by the name of Nicholas Barbon created it, making him the first person in the industry to compile an investing handbook. This video has a lot of information that we think will be helpful to you, and we would want to provide more. If you want to see additional videos, please ensure that you subscribe and click the notification bell to our channel.